The nature of the market trend obviously can be seen in any chart as it's moving sideways. However, it gets a little bit more amplified when you can see that there was lots of indecisive trading days in the market on a daily basis. Dojis and hammers and little shooting stars all represent indecision between the bulls and the bears. Right now, the analysis is pretty evident that the market is not moving in any major great direction. And not just depending on one index as an analysis, we can see the NASDAQ has pretty well been steady in this uptrend, not really closing with any major decisive moves below the T-line. As long as this trend stays above the T-line, we can pretty well assume there isn't any major selling pressure in this market. And add the fact that the transportation index is building up steam, breaking out of this big fry pan bottom type pattern, tells us money's not coming out of the market. It just shifts from one sector to another. It became evident that crude oil prices were going to stop at the 200-day moving average. There's our bullish harami, confirmed the next day. And then there was a nice breakout intraday today after they announced the inventory report. So this, knowing that the crude oil prices were moving back up, allowed investors to take advantage of the oil stocks to start moving. And this is where you kind of observe the obvious. Our recommendation on EMES was based on, notice where we had a left-right combo. That's a doji followed by a bullish engulfing signal. And notice where it occurred. Right smack dab off the 50-day moving average and your stochastics heading up. Followed by a doji sandwich, which is a bullish candle, a doji, and it opens positive. Our rule of the doji says if it opens after a doji, it's usually going to move in the direction how they open it, which was another candle this magnitude of this candle and this candle that's about the same. That's called a doji sandwich with the doji sandwiched in between. The result of a doji sandwich is that there's going to be more upside. And notice where it broke out, right here at the breakout level, creating a very good move. Also being amplified by the fact that the inventories were low on crude oil, so the prices were heading higher. So this puts the investor using these reoccurring logical candlestick patterns and signals in the right conditions or the right place at the right time. That'll be it. We'll see you in the chat rooms.